Welcome back. The Dow bounced back from an early low Monday, plunging 450 points at the open.
Ended up closing down about 66 points. Investors around the world jittery about trade talks between U.S. and China, just days before a Chinese delegation is scheduled to arrive for another key round of trade negotiations. President Trump threatened to raise tariffs currently in place on $200 billion of Chinese goods from 10% to 25% by the end of the week. Prolonged trade tensions could take a toll on U.S. economic growth, upping costs for households and businesses. And here to discuss more on how the trade talks could affect all of us here is Brent Wilsey, president of Wilsey Asset Management. Brent, great to see you.
Great to be here.
So what are your thoughts? Is this just negotiation, hard negotiation by Trump, or should we be worried?
I wouldn't be worried about this. If you're investing, you should be for the long term, but you really got to kind of look at what's going on here. You have to understand how the negotiations are going on. Trump is a very hardline negotiator, very tough and guns blazing and so forth. He's going to wait the last minute, get this done. And if you don't do it, he's got threats. And I think he'll follow through on this. I think he will. He has to now. The Chinese are more laid back. Let's take our time. But the problem I'm taking their time is the fact that we want to get this deal done so that we can have a fair trade with them. So it is very difficult. So this week, one little word can move the markets up or down very quickly. And what I'm warning investors, do not panic and pull out. Look at this, but understand what you have in your portfolio.
It's interesting because today something happened that doesn't happen very often. The top Democrat, Chuck Schumer, actually encouraged Donald Trump, President Trump, to be tough on the Chinese, and they're on the same side. And that's because we're coming from a level of strength, right?
Yes, yeah. And that's so good to hear that because, again, we have to have this united front to get this done. It shows China that we have to come in. The big day is Friday. And if they come in and have a good verbal commitment, it looks pretty good, we're fine. But if it's weak and kind of, faltering, like I think we'll see tariffs on the $250 billion next week from President Trump. I think I'll proceed with that.
Some U.S. representatives said that the Chinese really started this. They reneged on some of the deal that was already in place over the weekend, and then Trump saying, well, we're going to go from 10% to 25% was really kind of a counter to their reneging on the deal. Can you talk more about that?
Yeah, I mean, that's what's going on. I mean, both sides are kind of playing, see how much we can get away with, and China's saying, well, and they want our intellectual property rights. They want that. I mean, so they want stuff, but we're saying, no, you can't have that. And we're going to be as tough as they are. And their market was down nearly 6% today. So they're going to be hurt more than this than we are.
So investors obviously don't have a say on what's going on, but we do have control over our assets. What are you advising your clients?
Well, what I'm telling people, what investors should do or their advisors should do is look what they have in the portfolio. If you have industrials in there, if you have technology, you could be in a difficult position if this doesn't go on through. You're going to see these stocks like Caterpillar, Deere, even Apple drop even more because they either manufacture or sell to China. That's going to be a very hard thing to do. So you've got to either yourself or your advisor know what's in my portfolio, how's this going to affect me, and what should I do about it? So that's the big key, is understand what you have in your portfolio.
It opened down about 450. It ended the day down about 66, and I noticed that some of the stocks were really down, and then they started to creep their way back up. A lot of people thought in the morning, they're down too much. This is a great buying opportunity, and some people tried to jump in and make some money.
Well, that's true, Logan, because there's, trillions of dollars on the sidelines. They're just waiting for a pullback. So when the pullback happens, people could go in, who I feel sorry for, is the people that panic and pull out, not knowing what they're doing, and then they'll make money investing.
And this could impact some IPOs that are kind of up and coming, right? Uber, for one?
Yeah, I don't know. Uber's supposed to come out this week, and I'd be very concerned if you come out like on Thursday, negotiations aren't going very well. They could follow the same path that Lyft followed and made down dramatically. Bad timing on them.
Lyft made it up to about $88 a share. I think it closed at $60 today. So
Yikes.
Sometimes you get in early on these IPOs and you just get crushed. Other times, it's a good idea.
Only if we knew which time.
I know. If we could just have the crystal ball, Brent. Come on.
And I have one in my office. But one bright spot too is that if these tariffs don't go through, guess what's going to happen? Oil will drop. Gas prices will come down. So one positive that we can talk about.
All right, we'll take it.
Brent Wilsey.
Thank you so much.
Thanks, Brent.
You're welcome.
Well, there is a battle over transportation.